BlackRock.
BlackRock announcing its
The company that owns the world and the forces that control you. It is everywhere in our financial lives, even if we don't realize it. Every post you like, every product you buy, every investment that you make, it is there, silently collecting data and pulling strings. Ever heard of BlackRock? It's the biggest money manager in the world, handling well over 10 trillion US dollars. That's more money than most countries have. Think about that for a second. One company managing that much wealth. The story starts with Larry Fink, who built BlackRock from scratch. Today, he's one of the most powerful people in finance, giving advice to presidents and prime ministers. When he speaks, Wall Street listens. BlackRock manages retirement funds. They invest in big companies and run a super smart computer system called Aladdin that handles trillions of dollars in investments every single day. But what does it mean when one company has so much control over the world's money? Some say it helps keep markets stable, while others worry it's too powerful. Let's explore how BlackRock became so huge, what it does with all that power, and the man who started it all. This is a story about money, influence, and the company that shapes our financial future. BlackRock's story begins with Larry Fink, a man whose career in finance had a rocky start. Born in 1952 to a middle-class family in Van Nuys, California, Fink's early life gave no indication of the financial titan that he would become. His father owned a small shoe store, and his mother was an English professor. Fink's journey into finance began when he studied political science and economics at the University of California, Los Angeles. After graduating, Fink joined First Boston, an investment bank, where he quickly made a name for himself in the mortgage-backed securities department. His innovative approach to bond trading helped him rise through the ranks rapidly. However, his meteoric rise came to an abrupt halt in 1986, when a miscalculation led to a $100 million loss for the firm. This setback, while devastating at the time, would prove to be the catalyst for Fink's greatest achievement. Determined to learn from his mistakes, Fink left First Boston and set out to create a new kind of financial firm, one that would prioritize risk management and use technology to make better investment decisions. In 1988, with support from the Blackstone Group, Fink co-founded BlackRock Financial Management. The company's initial focus was on fixed income securities and risk management. From the beginning, BlackRock differentiated itself through its sophisticated risk analytics system, later known as Aladdin, asset, liability, debt, and derivative investment network. This technology allowed BlackRock to analyze and manage risk across vast portfolios in ways that were previously impossible. Aladdin quickly became the company's secret weapon, attracting clients who were impressed by BlackRock's ability to navigate complex financial markets with unprecedented precision. BlackRock's growth in its early years was nothing short of phenomenal. By 1994, just 6 years after its founding, the company was managing $53 billion in assets. This rapid expansion caught the attention of PNC Financial Services, which acquired BlackRock in 1995. However, Fink negotiated to keep BlackRock as a separate entity, maintaining its independence and unique culture. The next major milestone came in 1999, when BlackRock went public, listing on the New York Stock Exchange. This move provided the company with the capital it needed to fuel further expansion. Over the next decade, BlackRock continued to grow both organically and through strategic acquisitions. In 2006, it merged with Merrill Lynch Investment Managers, doubling its assets under management and expanding its global reach. But it was during the 2008 financial crisis that BlackRock truly cemented its position as a financial powerhouse. As banks and other financial institutions crumbled, BlackRock's risk management expertise became invaluable. The US government turned to BlackRock for help in managing the toxic assets of failed institutions like Bear Stearns and AIG. This role not only showcased BlackRock's capabilities, but also gave the firm unprecedented insight into the workings of the financial system. In the aftermath of the crisis, BlackRock continued to expand its influence. In 2009, it acquired Barclays Global Investors, including its iShares exchange-traded fund ETF business. This acquisition was a game changer, making BlackRock the largest asset manager in the world and giving it a dominant position in the rapidly growing ETF market. Today, BlackRock's reach extends far beyond its origins in fixed income securities. The company manages a diverse range of assets, including equities, real estate, private equity, and infrastructure. Its client base includes corporations, governments, foundations, and millions of individual investors. Through its various investment vehicles, BlackRock holds significant stakes in thousands of companies across every single sector of the global economy. The sheer scale of BlackRock's operations is difficult to comprehend. With over $10 trillion in assets under management, the company's influence on global markets is unparalleled. To put this into perspective, BlackRock's assets are greater than the GDP of every country except the United States and China. This enormous pool of capital gives BlackRock significant voting power in countless companies, effectively making it one of the most influential shareholders in the world. At the heart of BlackRock's success lies a powerful and mysterious technology platform known as Aladdin. Short for Asset, Liability, Debt, and Derivative Investment Network, Aladdin is much more than just a piece of software. It's the central nervous system of BlackRock's vast financial empire, and a key tool used by institutions around the world to manage their investments. Developed in-house by BlackRock, Aladdin is a comprehensive investment management and risk analytics system. It combines sophisticated risk analytics with portfolio management, trading, and operation tools in a single integrated platform. This allows users to see their entire portfolio in real time, understand their exposure to various risks, and make informed investment decisions based on complex data analysis. The power of Aladdin lies in its ability to process and analyze enormous amounts of financial data. Every day, the system performs quadrillions of calculations across millions of portfolios. It tracks about 2,000 risk factors daily, from interest rates and credit risk to climate change and political instability. This allows Aladdin to create detailed risk profiles and forecasts, helping investors understand potential outcomes under various market scenarios. But what truly sets Aladdin apart is its scale. BlackRock doesn't just use Aladdin for its own operations, it licenses the technology to hundreds of other financial institutions, including banks, insurance companies, pension funds, and even competing asset managers. It's estimated that Aladdin helps manage around $21.6 trillion in assets globally, which is roughly 10% of the world's financial assets. This means that a significant portion of the global financial system relies on the same risk management and analysis tools. The widespread use of Aladdin has both benefits and potential risks. On the positive side, it provides a level of sophistication in risk management that was previously unavailable to many institutions. This can lead to more stable financial markets and better informed investment decisions. However, critics argue that the dominance of a single risk management system could lead to systematic risks. If many large institutions are using the same models and assumptions, it could potentially amplify market movements or create blind spots to certain types of risks. Moreover, the fact that BlackRock has insight into such a vast amount of financial data through Aladdin raises questions about potential conflicts of interest. While BlackRock maintains strict firewalls between its Aladdin business and its assets management operations, the sheer volume of information flowing through the system gives the company a unique perspective on global financial flows. The influence of Aladdin extends beyond just the private sector. Governments and central banks also use the system, further cementing BlackRock's role as a key player in global finance. During the 2008 financial crisis, and again during the economic turmoil caused by the COVID-19 pandemic, the US Federal Reserve turned to BlackRock, and by extension, Aladdin, to help manage its emergency lending programs. As financial markets become increasingly complex and interconnected, the role of systems like Aladdin is likely to grow. BlackRock continues to invest heavily in the platform, incorporating new technologies like artificial intelligence and machine learning to enhance its capabilities. The company is also expanding Aladdin's scope, developing tools to assess environmental, social, and governance (ESG) risks, which are a growing area of focus for many investors. The story of Aladdin is, in many ways, the story of modern finance, a world where the vast sums of money are moved based on complex algorithm and risk models. As BlackRock's secret weapon, Aladdin has played a crucial role in the company's rise to dominance. However, its widespread adoption also raises important questions about the concentration of power in the financial system and the potential risks of relying too heavily on a single technology platform. BlackRock's influence extends far beyond the world of asset management. With its enormous pool of capital and sophisticated analytical tools, the company has become a major force in shaping global markets and even government policies. This influence manifests in several ways, from its voting power in thousands of companies to its advisory role to governments and central banks. As one of the world's largest shareholders, BlackRock has significant voting power in countless publicity-traded companies. Through its various funds and ETFs, BlackRock holds substantial stakes in nearly every major corporation across the world. This gives the company a powerful voice in corporate governance issues, from executive compensation to environmental policies. In recent years, BlackRock has increasingly used this influence to push for changes in corporate behavior, particularly in areas like climate change and diversity. Larry Fink's annual letter to CEOs, in which he outlines BlackRock's priorities and expectations for the companies it invests in, has become a closely watched event in the business world. In these letters, Fink has called for greater focus on long-term value creation, improved disclosure of climate-related risks, and increased board diversity, among other issues. BlackRock's stance on these issues can have real-world impacts. For example, in 2020, the company announced that it would divest from thermal coal producers in its actively managed funds. Despite these challenges, BlackRock's global influence shows no signs of waning. As the company continues to expand its reach and refine its technologies, it is likely to play an even greater role in shaping the future of global finance. Whether this outsized influence is ultimately beneficial or detrimental to the global economy remains a subject of intense debate. At the heart of BlackRock's remarkable success story is its founder and CEO, Larry Fink. His vision, leadership, and ability to navigate complex financial landscapes have been instrumental in transforming BlackRock from a startup into the world's largest asset manager. Understanding Fink's background, philosophy, and approach to business provides crucial insight into how BlackRock operates and the principles that guide its decisions. Larry Fink's journey to becoming one of the most influential figures in global finance is a testament to his resilience and adaptability. Born into a middle-class family in California, Fink's early life gave little indication of the financial titan he would become. He studied political science at UCLA before earning his MBA from UCLA's Anderson School of Management. His career in finance began at First Boston, where he quickly made a name for himself in the mortgage-backed securities market. However, Fink's early career wasn't without setbacks. In 1986, a significant miscalculation led to a $100 million loss for First Boston. This experience, while painful at the time, proved to be a pivotal moment in Fink's career. It instilled in him a deep appreciation for the importance of comprehensive risk management, a principle that would become a cornerstone of BlackRock's philosophy. After leaving First Boston, Fink co-founded BlackRock in 1988 with a vision of creating a new kind of financial services firm, one that would prioritize risk management and use technology to make better investment decisions. From the outset, Fink emphasized the importance of understanding and managing risk across entire portfolios, not just individual securities. This holistic approach to risk management set BlackRock apart from its competitors and laid the foundation for its future success. Fink's leadership style is characterized by his long-term thinking and his ability to anticipate and adapt to changes in the financial landscape. He has consistently positioned BlackRock at the forefront of industry trends, from the rise of exchange-traded funds to the growing importance of sustainable investing. Under his guidance, BlackRock has made strategic acquisitions and investments that have expanded its capabilities and global reach. One of Fink's most notable qualities is his ability to build and maintain relationships with key decision makers in both the public and private sectors. His network includes CEOs of major corporations, heads of state, and central bankers. These connections have not only helped BlackRock navigate complex regulatory environments, but have also positioned the company as a trusted advisor during times of financial crisis. In recent years, Fink has increasingly used his platform to advocate for what he sees as responsible corporate behavior. His annual letter to CEOs, which outlines BlackRock's expectations for the companies it invests in, has become a closely watched event in the business world. Through these letters, Fink has pushed for greater focus on long-term value creation, improved disclosure of climate-related risks, and increased board diversity, among other issues. Fink's emphasis on sustainability and stakeholder capitalism represents a significant shift in how he views the role of corporations in society. He argues that companies must serve a social purpose beyond just maximizing shareholder returns. This perspective has led BlackRock to take more active stances on issues like climate change, pushing the companies it invests in to better address environmental risks and opportunities. However, Fink's growing influence has also attracted criticism. Some argue that he wields too much power, effectively setting corporate agendas through BlackRock's enormous shareholdings. Others have pointed out potential conflicts of interest, given BlackRock's dual role as a major shareholder and a provider of financial advice and technology to many of the same companies. Despite these criticisms, Fink's impact on the financial world is undeniable. Under his leadership, BlackRock has not only become the world's largest asset manager, but has also played a crucial role in shaping the modern financial landscape. From advising governments during financial crisis to pushing for greater corporate accountability on issues like climate change, Fink and BlackRock have been at the center of many of the most significant financial developments of the past 3 decades. Looking to the future, Fink shows no sign of slowing down. He continues to position BlackRock at the forefront of emerging trends in finance, from the integration of artificial intelligence in investment decision-making to the growing importance of sustainable investing. His vision for BlackRock extends beyond just managing assets. He sees the company as playing a crucial role in addressing global challenges like climate change and economic inequality. Fink's leadership style and vision have been instrumental in shaping BlackRock's corporate culture. He has fostered an environment that values innovation, risk management, and long-term thinking. This culture has helped BlackRock attract and retain top talent, further fueling its growth and success. One big challenge BlackRock faces is that governments are watching big investment companies more carefully. In America and Europe, some people want stricter rules for companies like BlackRock, saying they're so important to the financial system that they need extra oversight. These new rules could make it harder for BlackRock to grow into new business areas. BlackRock also needs to handle the debate about 2 types of investing, passive and active. While BlackRock has made lots of money from passive investing through its iShares, ETFs, which simply track markets, some worry that too much passive investing could hurt how markets work. BlackRock needs to find the right mix of both approaches to keep in. Climate change is both a problem and an opportunity for BlackRock. While the company says it cares about sustainable investing, some critics say it's not doing enough about climate risks. As more people worry about climate change, BlackRock needs to improve how it handles green investing and pushes companies to take climate action more seriously. Technology changes are also crucial for BlackRock's future. While its Aladdin system helps manage risks and analyze investments as well, BlackRock must keep improving to stay ahead. New technologies like artificial intelligence offer opportunities but also bring challenges. BlackRock needs to invest in these new tools while being careful about using computers to make investment decisions. BlackRock's growth in new markets, especially China, could help it expand. However, this also means dealing with political risks and different rules in these countries. Understanding these complex situations will be important for BlackRock to succeed. More people around the world are starting to invest, which could help BlackRock grow. The company could use its size and technology to offer affordable investment options to more people, but it also means competing with new investment apps that appeal to younger people who like technology. As BlackRock gets bigger, keeping its company culture strong is another challenge. The company succeeded because it values new ideas, careful risk management, and long-term thinking. As it grows worldwide, keeping these values while adapting to local markets will be important. BlackRock also needs to show it's serious about making businesses better for society, not just profits. While CEO Larry Fink writes letters about this and the company focuses on responsible investing, BlackRock needs to prove it's really making changes, both the companies that it invests in and itself. Protecting private information will become more important for BlackRock. Its Aladdin system handles lots of financial data, so BlackRock must keep this information safe and use it properly. New financial technologies like cryptocurrency and decentralized finance could either help or hurt BlackRock. While these new technologies might change traditional investing, they also offer new opportunities. How BlackRock deals with these new investment types could affect how well it grows in the future. Because BlackRock is so big and influential, its decisions can affect markets, change how companies behave, and influence what governments do. BlackRock's story goes beyond just making money. It shows us how today's money world is all connected, how new computers can change whole business areas, and the tricky balance between making profits and taking care of people and nature. Thanks for watching this video into the world of BlackRock. If you found this eye-opening, be sure to hit that subscribe button and share the video with others. We'll see you in the next video.